All right. Hey, y'all. Listen, don't mind this. It, it is cold as I don't know what. Like, I know they hot. I got some hot bodies in the house, okay? So that's why I'm over here. I start to put the blanket on, not even lying, y'all. So don't mind me and how I look. I'm going to have the screen sharing and whatnot for the longest time. But I want you guys to see my face for a moment before we get into everything. Friendly reminder, y'all, as you jump on here, number one, I ask that you please, please, please make sure that you, number one, give this a thumbs up for those of you on YouTube and for those of you on Facebook. Make sure that you heart it, like it, whichever one you want to do. Okay. Second thing is to type in the chat if you're watching me live, even if you're watching a replay. But no matter what, type in the chat where you're tuning in from. Put your city, put your state, put your country. If you want to rip your country, put your country in the comments, okay? Tonight I'm going to be going over something just a little bit different because we're getting closer to the end of the year. And I do have a lot of people that are a part of my community that have the same question over and over again because they know that I do more than just trade. So I'm going to address one part of that today for y'all, okay? Or tonight, I should say, for y'all. And then also, y'all, if you're on YouTube, do me a favor. If you have not subscribed to this channel yet, y'all, that's a really great way to support so that way I can continue to do what I'm doing. And see that I'm giving value, y'all. The more of you that subscribe, the more of you that give these videos the thumbs up, the more of you that share and comment, the more of you that hit that notification bell. This lets me know that I'm giving y'all something of value and that I should continue to do it. If I don't get those things, then guess what I do? I'm going to fade black and then I will stop sharing. I'm not saying that to be funny. I'm saying that because I know I don't want to waste your time and I definitely don't want to waste my time. So please, if you're finding this of value, make sure you subscribe to the channel, hit the notification bell, especially if you're not part of the Prosperity Clouds community yet. Make sure you hit that notification bell so that way you know when I am live because the time for the FOREX live market analysis has changed. As you can see, we are now on Mondays, and that's at 9 p.m. Eastern, 8 p.m. Central, and that is 6 p.m. Pacific. I had to think about that one. All right, so let's get to what we came to tonight because I want to make sure that we are in and out prayerfully within an hour. We might push it a little bit over an hour, but definitely the goal is 1 hour. Okay. So for those of you that are new to this channel, thank you so very much for jumping on here. I appreciate y'all. The show most definitely do. Keep tuning in. Keep tuning in. Keep tuning in. All right. So here's a disclaimer, y'all, before we get into anything pertaining to trading and investing. Remember, y'all, that this trading and investing in any market can contain substantial risk and is not suited for every individual. Every trader and investor learns and performs differently. Thus, the results would not all be the same. There is a potential for a trader and investor to lose all or more than their initial investment due to numerous factors. Therefore, it is suggested that each trader and investor only invest money that can be lost without jeopardizing their financial security. I am not a financial advisor. Therefore, or oh, my bad, I'm not a financial advisor nor a licensed trader. I am only sharing information for educational purposes only. Y'all, please remember that I want to make sure that people know the ups and downs that come with this. So I share my personal experiences. And with that, I am also only sharing information for educational purposes because the expectation, guys, is every single one of you as a viewer do your own research, okay? All traders and investors that utilize strategies discussed, services, and products shown will do so at their own risk. Remember, y'all, past profits do not guarantee future results. And as a final note, again, all of this information is being provided for educational purposes only. Okay. So there we go. Let me know if you guys can hear me. Let me know if you guys can hear me. I'm sure hoping y'all can hear me. Okay. Okay, so last week, in review, let's just do this so that way you guys can see me. Hey, last week, we analyzed gold and, of course, Bitcoin. Both of those hit our profit areas. Gold and Bitcoin did a lot of moving around last week, and it's doing well. I won't say gold necessarily this week, but definitely Bitcoin has been on the move again this week. So these two things we will be looking at again tonight, and then I'm going to also add in one more thing as well that I trade. So I'm going to be adding in stuff that I trade because I'm not seeing a lot of comments on what you guys would like to see me mark up. So I'm just gonna go with what I normally do on a weekly basis. Okay. There's only a few things that I trade. I've added one thing. I've added two things that I've been analyzing, and I will be trading consistently, especially coming into 2025. I'll be trading those things consistently. So I've picked up two things, and I'm going to be dropping one of the things that I was trading for the longest time. Okay, there's a reason for that, but we're gonna just continue to move forward. So that was last week. We're currently 2-0 for the month of December so far, and hopefully, prayerfully, it continues to move in that direction, and we have another undefeated month because last month was an undefeated month. Okay, went too far, went too far. Okay, there we go. Okay, so I got a new computer, y'all, so it's a little sensitive, and I got to get used to it. Okay, so our biggest movers for last week from the first to the sixth is, what's funny, and I'm looking at this, especially when I was going back, and I'm like, oh my gosh, like nothing was really moving like that. It was a lot of consolidation. Yeah, we had some selling going on, but there wasn't big moves happening like we've seen in the past few months. So like even with USD, JPY, and GBP JPY, like normally in a week's time, you're looking at over 300 pips of movement. Like neither one of them hit 300 pips, either in a buy or a sell for last week. So that was actually like, okay, the market is definitely. What does that tell me? That tells me that the liquidity in the market is now slowing down. Hence why I suggested that everyone make sure that you start thinking about when you want to cease trading, because those big moves that we have grown accustomed to this year, they not they won't be there, but they will start to slow down. Okay, which is what we see just with this USD JPY and GBP JPY consistently have been over 300 pips of movement in a week, and it didn't even touch it this week. So that's just one thing to pay attention to. Even US 30, like I have gold on here because gold outperformed US 30, and I was talking about just in movement and the amount of pips. I think US 30 was like 320. So it wasn't like there was a whole, a really big difference, but still, I mean, gold moved more than US 30. Even the previous week, gold moved more than US 30. So again, y'all, people are closing out positions. And I'm not talking about just like regular retail traders. No, I'm talking about people with the big money. They are closing out positions. They're preparing, for the tax season to say, hey, look, these are our lessons in the market, and they're looking to be able to write some stuff off and everything. So I would just say keep your eye on the market, and if you're seeing that the moves are not really going in your favor, maybe you should consider cutting ties with the market a bit earlier this year than you considered originally. Okay, follow the market. The market's going to tell you what you should do. All right. Hence why, like with gold, the setups were not ideal for me. They definitely weren't low risk setups. Hence why I didn't trade it. As much as I love gold, I look for very low risk setups because I don't want to be in a trade for a long time, and I don't want to be in a trade where I'm sitting here like, well, I don't do that. Either it's a go or it's a no go. That's it. That's all. That's where I have grown to. right? But Bitcoin was really our biggest mover out of everything, to be honest, in the market that we normally look at. Bitcoin was definitely the biggest mover by far. It's always the biggest mover anyway, but still, like when you're looking at these numbers 136, 257, 328. And then you have Bitcoin that dropped down almost 10,000 pips. You're like, what? Again, now I got to say this, y'all, before I say anything else about cryptocurrency. I strongly suggest anyone that is brand new to trading, if you're going to trade in a forex market, please stay away from trading crypto. Like seriously, as a beginner, if you plan on trading in the foreign exchange market, I know these numbers for trading Bitcoin may be tempting, but I'm gonna warn you guys of something because me and my best friend were talking about this earlier today, or was it last week? Either earlier today or last week, but we were talking about how Bitcoin spread, meaning the cost to enter a trade, is the highest out of anything that we trade on a regular basis. So that means, guys, I need you all to pay attention to that. If you know that you are new to trading and you don't have the tolerance for rapid movements to the upside and rapid movements to the downside, like you blink and the market is pushed down, trading in the cryptocurrency market is not for you at this time. You're going to have to work on building that muscle to be able to adjust and adapt to that type of volatility. Okay. And you need a substantial amount of money to start trading in the cryptocurrency market, to be honest. Specifically, if we're talking about Bitcoin or Ethereum, you really need to have at least $2,500 account. And that's a bare minimum. Like seriously, I would not suggest anyone trade lower than that. Okay, so $2,500, like you pushing it with 1,000, not even a lie. Um, so I suggest 2,500 because that gives you like a little bit of buffer, and that covers those very high spreads, which is your cost of interest rate. Okay, so, like I said, when it comes to the forex market, guys, we did experience a bit more selling than we did buying in the market, but there was also a lot of consolidation. So you're going to see, like when I pull up trading view, you're going to be able to see some of the things that I marked up for last week, what they were looking like though prior to the moves happening. Okay, and why some things I said that because the setups weren't there, you'll be able to see it hopefully with your strategy that you use, unless you're going to be using what I use, which is candlestick patterns. But you will see that there are some things like the setups just really aren't there, or the setups are there, but they don't give you that um, low risk probability. So, you're probably risking a lot to get way more, and with what you're going to trade that may not be feasible to get in less than 24 hours, like in a trading day. So, because I am a day trader, that's some of the things that I look for. I want to see that there's a high probability of me being able to be in and out of the trade before the next trading day. You know, preferably, y'all, not even gonna lie, like I be looking for like within an hour. I want to be out of the market. Like I want to be out the trade, in profit, and going about my day within an hour. But there are some times when I'm in it for a few hours. Okay. Um, so that's that part. Now let's get into this because I've had this question so much asking me pretty much like why for I'll just give an example. So when I was talking about after Bitcoin hit 93,000, all right, I was telling people because I kept seeing some individuals telling people to buy Bitcoin now, and I'm like, listen, if you have not already been purchasing Bitcoin, and let's say like you've been purchasing Bitcoin and you are on a cycle, like every single week or every single month, you have an auto draft coming out of your account and it goes straight to your Coinbase account or whatever. And you're buying Bitcoin with that. Okay, I got it. Like keep doing what you're doing. But I was talking specifically to the people who had never ever or were not consistent with purchasing Bitcoin. and they were moving off of FOMO, which is fear of missing out, right? And so what I was telling those individuals in that video is, if you know you have not already been buying Bitcoin, this is not the time to buy because it's at an all-time high. And there is a potential for a price to drop dramatically after it hits its all-time high. Now, in my own calculations, from the all-time high of Bitcoin, the potential for the next drop in price is at least 70%. So we're talking about, let's say 103, let's say that 103 was our actual all-time high, right? So I don't know what the number was, like 103, whatever. So I'm just gonna say like 103, 300, because it was something like that. It was 103, 3 or 103, I don't know. So I'm gonna say 103, 3, right? 103, 300. So let's just say that this is gonna drop possibly 70%, which is what my calculations were saying, right? So if that happens, y'all, we're talking about Bitcoin dropping down like roughly $72,000. Okay. So what that will put us at is, somewhere in between, let's say 29, I say 29, maybe $35,000, somewhere in that range, right? That's what we can see. And that's only if that 103, whatever, is our all-time high. And that's it. Now, let me let y'all know something. I'm about to show you these numbers and break these numbers down, but I want you all to think about this. Um, it just escaped me. Oh my gosh, it just escaped me. My brain just drew a blank. I was about to say something specifically about the price. Okay, it just went away. So maybe it wasn't important. But yeah, so all-time high, 103, whatever it was. We're looking at potential 70% pullback. So price goes down. So that's somewhere in between 29,000, max on a good note would be, or best case would be like the furthest it goes is 35K. Okay. So, and that's only if this was the high, right? I know what I was about to say. So typically with my research that I've done, going back and looking at the charts and stuff, the all-time highs have happened after happenings. That's number one for Bitcoin specifically. And number two, the all-time highs happen either in the month of November or December. Well, we're in December. So when I did that video, that people, if this is the all-time high, which was 93-ish or whatever, then that means that we should be looking for a sale. If it's not, then we still have the month of December to see what's going to be the all-time high. Okay, we're in December. Price dropped down to like 97,000 or something like that today. You know what I'm saying? So what they tell you, 103 to 97, that's a massive, massive drop that has happened since this all-time high. Now, this is not to say that 103 is it and that's as high as it's going to go. I don't know what day per se, and there's no guarantee that history is going to repeat itself. But I will say there's a possibility, a strong possibility, that December will be the all-time high for Bitcoin for this cycle, right? But there's no guarantee. So let's just go through some numbers, all right? So that way you guys can see how this works. So let me remove this so that way I can see. Boom, I got me out the way. All right, so let's run it. So on the left-hand side, you see here, I have January open price. This is for each year. January open price, December close price. So January 1st, what was the price? December 31st of that year, what was the price? And then I have the gain loss percentage. Y'all, please take a screenshot of this. And the reason I want you to take a screenshot of this is because now, if you have the data, you can make a better decision on how you want to move as a trader, but also as an investor when it comes to cryptocurrency. Okay? So 2016, this is what we see. We see that at the beginning of 2016, price was at $433. It closed at 963. All right. So for that year, just in general, we saw a gain of 122%. 2017, we saw a gain of over 1,000%, right? So 1,300%. Now, here's the reason why we saw such a big gain, and that is because the halvening happened in 2016. Typically, with Bitcoin, after a halvening, there is a new all-time high that is created. Now, sometimes it could be within, the next 6 months or so, okay? But in this case, it went a little longer. That's all good, okay? So July was the halvening in 2016, and then in 2017, that's when we saw that the higher price for one Bitcoin and that very high percentage gain, right? Now, 2018, this is when the bear market started, okay? So you went from 2017 to having a very high close for Bitcoin, and then it opened up with a high, and then by the end of the year, it was down 73%. So that was 73% of the gains from the beginning of the year throughout the year. 73% of those gains were wiped out. Okay, so it went from $13,880 down to $3,700 per coin. All right. Now again, even though this told us we're in our bear market, we started to ramp up a little bit in 2019, because even though price opened up in 2019 at 3,700, it closed with a 94% gain of over $7,000 per coin, right? 2020, this was when I got into the cryptocurrency market, specifically buying Bitcoin and Ethereum. Those were the two purchases that I knowingly made because I wanted to invest, right? So 2020 is when Bitcoin went up to 28,000, so almost $29,000 per coin. This was the close for 2020, and that was a 303% gain. Now, 2020 was also another halvening. I don't know if you all noticed this, but I need you to catch this. The halvenings were happening on election years in the United States. 2016 was an election year. 2020 was an election year. Guess when the next election year was, y'all? 2024, where our last halvening was April of 2024. Okay, so just kind of keep that in mind. The next halvening is in 2028. Well, guess what? That's another election year, U.S. presidential election year. Okay, so 2021 is when we saw the market continue to rise. All right, and we also had an all-time high occur in 2021. All right, and then that was our 60% gain. But 2022 is when the bear market happened. Right, that's when we saw price continue to drop, and from the beginning price, when price opened in January, down to when it closed in December of 2022, that was a 64% loss. Okay. Now I'm gonna tell y'all something. From the all-time high though to this low, that was higher than that. That percentage was higher. Okay. But just from when price opened that year of 2022 to when it closed, that was a 64% loss. 2023, which was last year, y'all, we saw that Bitcoin came back up. By the end of the year, Bitcoin had rose back up to 34,000. But I'm gonna tell y'all something. And in between that, in 2023, Bitcoin had dropped down to 15,000 ish. Like it was 15,000 somewhere in 2023. So that wasn't even 16,000 was not the low. That was just the open price January 1st, 2023. But within 2023, Bitcoin dropped down to like 15K. Okay. So, but it rebounded, okay, and went back up to 34,000, and that gave us a 106% gain. So now for the year 2024, y'all, so far from January 1st, 2024 to now, we are at a 106% gain. right now. And I just need y'all to know that these numbers are based on the price at the start and end of each calendar year. So they reflect when price is changing. It doesn't calculate, or it doesn't display to you guys when it hits these lows, like I just mentioned, 2023 going down to like 15K. Okay, that's not what these numbers are going to reflect. They just reflect the open price for the beginning of the year, close price for the end of the year. All right. So hopefully this helps you guys with being able to prepare for, trading and also for investing. Remember what I said when it comes to trading, or I would just say specifically for investing in Bitcoin, y'all. When it comes to that, you got to make sure that you're paying attention to where the previous lows were, where the previous highs were. Is the market moving a bit sideways? Because if the market is moving a bit sideways, this is the time for you to consider buying or selling. You need to hold your position until the market tells you what to do. Okay. So let's get to it. We're going to go to the charts. Let's go to the charts. How do I remove this? There we go. So let's get to the charts, y'all. It is cold in here. It is cold. All right, let's go. So, also share audio. Yes. Is it gonna share? Why is it not sharing? So I will be able to see. Yes, I wanted to do it. It's not sharing. Okay, there we go. So you guys should be able to see my screen. Right now, I'm hoping y'all can see my screen. This thing, I got this new computer, y'all, so my apologies. I sure hope y'all can see this just fine. If you can, let me know in the chat if you can't see it. Uh-oh. Let me know in the chat if you cannot see it. Uh-oh. Okay, so y'all should be able to see it because I saw that. All right, let's get it. So this is something that I wanted to show you guys. I marked up USD JPY today. And so this is something that I'm going to be looking at. Now, here's the thing. I want to make sure that people understand when it comes to trading for me specifically. Yeah, I use something called candlestick patterns. Okay. And so with those candlestick patterns, it gives me an idea of what the market is telling me. It's like a language. So if you can't tell me with your words, then I can look at the chart and I can see that it's saying that there is some indecision in the market, or that there is buying momentum in the market, or there is sellers momentum in the market. So like right now, yes, earlier when I looked at the currency strength meter, it was saying that the US dollar was strong. Okay, cool. So if the US dollar is strong and the yen is weak, then that would mean that I should be considering buying USD JPY. Okay, cool. So if I consider buying USD JPY, what I want to see in what I put on here is that I wanted to see price come up, push down, and then go back up, which is what happened up here. It didn't happen down here because it just took off and went straight to this previous week high, which is this blue line. Okay. So it did the retracement here and then started to come back up. It got close to my take profit one. Like it's literally, this is literally like one pip. Yeah, that's only one pip off. So it missed the take profit one by one pip. So if I were to enter this trade, if I would have considered entering this trade, then I would have been looking to put a stop loss around here because I see, and that's only if, let me see something. I had to make it bigger, y'all, so everybody can see. Okay, so this body is a little bit bigger than this one, right? and then I had a confirmation here. So let's say I'm like, oh yeah, I'm entering this trade, then my stop loss would be below this low here, right? And then I will be looking for a take profit here. But like I said, this is 1 pip off. That was it. So it got close, but it didn't touch it. So that would mean that this would have been a lesson in the market, right? So for you guys, what I'm going to say moving forward for this, oops, I'm going to delete that. This is what we'll do. So I would say the same thing up here. And that's only if this is legitimately going to buy. So if I see a buy candle come here, then that would mean my stop loss will go down a bit more, right? And I will want to see price clear here. It has to clear here. So it's going to have to come up. Oops. So it's going to have to come up here, clear here. Okay. You could wait for a retracement, which makes sense. As a matter of fact, let me fix that. My bad, y'all. So price needs to come up here. It can pull back again. Okay. And then go. You don't always have to wait for a retracement, y'all. It's totally up to you, but I'm going to tell you something. When it comes to seeing the market pull back, the reason for that for some of us is if you just take the trade immediately, that's considered an aggressive move. But if you wait for it to pull back and then form a new, what I know to be as a bullish candlestick pattern in this case, when you wait for that, now that's considered a conservative move, and you can make a decision instead of an impulsive move because you're like, oh, it just cleared. I just want to go. That's super aggressive. Okay. Not everyone is built for the aggressive moves. So for my people who are not built for the aggressive moves, you can always wait for a retracement. If the retracement does not happen, it's okay. There are plenty of other options out there, y'all. Don't ever feel like you have to trade something because it's something you want to do. Like, you can always just look at other stuff or just not trade that day. All right. Save yourself some money, save yourself some heartache, and just use your strategy. Stick to your strategy. Be disciplined in your strategy, and trust me, you will end up getting results. Okay. So from here to here, we're looking at potential 33, 34, 4 pips. Okay, roughly. All right. If your stop loss is more than that 33, 34, then you would be looking here. Now, you don't have to use the areas that I have, y'all. You don't have to use the areas I have. Okay, you can always use your strategy and how you identify your profit areas. You can always use your own. All right, I'm just showing you guys what I have, what I did. All right, so these are 3 areas that I was looking at for a buy. Now, if I wanted to, if let's say the US dollar weakened and the yen got stronger, then that would mean that I would be looking for a sale. So because I have this right here, I'm just going to go off of where price is right now down to here. That's roughly 46 pips. So guess what we could do? We can make that a profit area. TP1 for sale. And here's the reason why, here's the reason why, y'all, that I make sure that I do buy and sell, because the market changes. There's news that happen. There's always something. So you can be prepared instead of trying to figure it out. You already have it. Okay. This yellow line is my day high. This yellow line down here is my day low. This is my previous month high. This is my previous week high. So now I'm going to move this out the way. And guess what would end up being my stop loss if I were to take a sale? This TP1 could actually be my stop loss. So that means that, let's see what we would be looking like. So let's just say hypothetically price slows down and it plays around at this price point, oops, I clicked it off, then we would be looking at a potential 40 pip stop loss. So that means we need 80 or greater, right? This is not 80. So now here's the thing. This is where I tell people I need you to use your common sense. Even if the pattern shows up with what you're trading, does it have the tendency consistently to give you the amount of pips that you're going to need to get a risk to reward ratio of 1 to 2 at a bare minimum? USD personally does not give an 80 pip move consistently within a trading day. Okay, it's not consistent enough for me. So that would mean I personally would not take the sale, because that means I need at least 80 pips. And that's only if price stays here. If it comes down even further, that means I need a bigger take profit. Well, if USD doesn't on average give me that within a trading day, because I'm a day trader, I'm not going to take that trade. Right? So, and that's only if that's the case. All right. So what you could do is look for another area, but that means you will be taking a risk of price coming here, slowing down, and or reversing. All right. So let me see if I can find another area. Let me change this to green. This only looks like one. Nope, that's not a good one. Let's see. That's one. That's not a good one either. But what about right here? This one looks like it might be a good one here. Yep. Okay, so we got resistance, support, and then resistance in the past. Yeah. Okay. So, and for my people who are like, what are you looking at? Line chart. Okay. So this helps me. Support. That's 2 touches. Then it was resistance in the past. So that's 4 touches. And then it just played around in here. So that's a lot of touches in the same area, which means there is a higher probability, should price come in this area, that it may come back down to here. Okay, that's not a guarantee. It's just a high probability. All right, so I'm going to make this TP2 unless I find something closer than that. But again, y'all, what we're looking for is a possibility of getting 80 pips or greater. So from here to here is 100 pips. Okay, cool. Now this is only if the US dollar is weak, yen is strong, and we see that our candlestick pattern is present, and we could potentially get a risk to reward of 1 to 2 at a bare minimum. Okay, that's the only way this happens. If we don't have that, guess what? We don't enter the trade. Okay, we don't have that, we won't enter the trade. So there we go. Boom. So that's USD/JPY. So we will be looking for, if this were to buy, we will be waiting for price to push up, retrace, and then take it to the buy, to the upside. And only if you have the risk to reward of 1 to 2. And for a sale, this would have to close. Our US dollar would need to be weak. Our yen would need to be strong. And the risk to reward has to be there, at least 1 to 2. If you were to take this, because you're like, well, this is 100 pips, so I could take that. If I were you, especially with such low liquidity right now in the market, if I were you, I would activate my trailing stop here, if you know how to use it. If you don't, then that's something that you would have to, you can either ask, right, depending on your broker. That will determine how you utilize it. But also, there are a ton of YouTube videos too. If you don't want to ask the question and you just want to watch the video to get the answer for yourself, by all means, putting the FOREX broker that you're using, and then you should be able to see, like, let's say you're using forex.com. Okay, so how to use the trailing stop loss on forex.com. go to YouTube and put that in. And I'm pretty sure someone has created a video on it, okay, to help people out. All right. So there you go. So remember, we need a 1 to 2 risk to reward ratio, bare minimum. All right. More is better, but definitely bare minimum 1 to 2. And if this one gives you a 1 to 2, this one doesn't. In this market right now, if I were you, I would be activating a trailing stop loss here. Okay, because there's potential for it to come down here and then turn back around and go back up. Okay, so that is USD JPY. Got it. And then, so that's number one. The next one we're going to do is gold, like always, y'all. And then the last one will be Bitcoin. All right, so this orange box here is now complete because the imbalance has been filled, Chad. Yes. All right. So we can get this off of here. I marked this up earlier today, so I was looking for potential sale, and that was only if the U.S. dollar remained, if the U.S. dollar was strong. But we don't see that right now, so let's go over here. Cool. Bam. All right, so this is where price is at right now. So for some of you, you may be like, I trade gold at this time. Some of you may be like me, and you only trade gold during like the either London or New York session or the overlap. Okay, me personally, I only trade gold during the New York session. There are certain times because that's the around about time that the market has moved favorably for me. Okay, everybody's different. You do what works for you. All right. So right now, let's just say that I wanted to take this trade. Okay. I have a bullish candlestick pattern here. It has confirmed. So this would have been the time that I would have entered. And because I already had to take profit here, this will be my next one. But again, remember, y'all, we need to make sure that risk to reward is there. So risk to reward, that is 104, 101 pips. And then this will be, nope, that's almost a 1-to-1. Okay. So that would mean I would need to establish another area where price could potentially return to. So this is my imbalance. Let me see. Let me see if there's something in here. So like there's movement in here. So I could do this. Because that's 1, 2, 1, 2, 3, 4, 5. And then 6. All right. And then again, y'all look at the line. 1, 2. It got close here, but for sure, 1, 2. 2 or more is good. 2 or more touches is good. So now, by aggressive people, you can say, hey, once 9 p.m. Central hits, I'm getting in the trade. I'm taking a buy. If you were already looking at it, then you're probably already in the trade. You're probably already in it, okay? But if you're with me and you're like, oh, well, my strategy says that I can still take the trade, at the top of the hour, then do what your strategy tells you to do, y'all. But I'm going to tell you something. It's too late for me because I trade candlestick patterns. Once the move is gone, I have to wait for a retracement. That's me. Okay? Once the move is gone, I have to wait for a retracement. So you know what I'm going to do? I'm going to wait for price to do a new setup. It's got to do new setup. It don't do a new setup, I don't enter. All right? Not even going to lie, y'all. I wasn't going to trade gold today because it just on the 4-hour wasn't looking that great. And it's a lot of traffic. So there we go. All right, so now we have 4. So it's already here at 1. If this isn't going to give you a risk to reward of 1 to 2 at a bare minimum, then you can consider the next area. You can screenshot this, okay? But like I said, y'all, the move is already gone for me, so I personally cannot take it. My trading plan says that I cannot take this trade because the move is already gone. Okay, so I have to wait for the next retracement and a new bullish candlestick pattern to appear before I can take this trade for a buy. Okay. Now, if this were to sell, then I could look at taking this, and this is going to be my TP1 for a sale. All right. Because let's say it does not go above this high and it breaks down and starts to sell. Well, guess what? I could take this. This would be take profit 1 for a sale. Then I can possibly find another area. I don't like this. Let me see. Okay, so yeah. So that's one, but then it's resistance, resistance, and it got close to support here. So there's a lot of activity. So I could actually, if they're just going to be super close. Oop, wrong button. I pressed it again. There we go. All right, so that's this one. And that's only if the US dollar picks up strength again and pushes down. Okay. And in between here and here is how many pips? Let's see. So that's a 27, 28 pip gap. So yeah. So you can still use that. TP3 for sale. All right. Bam. And then I'm going to look for one more because I got 4 up here. So I'm going to look for one more. Let me see. Give me a second, y'all. There we go. So I got a lot of touches. All right. So there we go. So now if this does sell, if this were to turn around and sell, I did it again. I keep doing that. Thinking I don't press the button already. TP4 for sale. So again, like I said, y'all, the reason why I do this is because I want to make sure my music went off. But the reason I do this is so the market does change, y'all. So if the market were to switch and everything tells me sell, then guess what? Damn. So if this high here, if this area, oh no, I think I hit the ray. Here we go. If this here is not cleared, and then also, of course, the TP2 is not broke above, then that means we don't have a new high. Okay, we need, matter of fact, it's close. The take profit line is close. We need price to break here, which is our TP2 area, right? Price breaks that, then yes, we have new. Our buy trend is there again, right? If it doesn't, then that means that price is going to push back down, so that prepares us for the sale. All right. So let me remove this so that way I don't confuse anybody. I already got enough stuff on here. All right. So you can take a screenshot. Whatever your strategy tells you to do that, follow that. If you trade like I do and you use candlestick patterns, y'all already know what we're doing. All right. Last one, y'all. Then we're going to wrap. We got 7 minutes left. And that is Bitcoin. I already did this, so let me remove this. All right. So this is what I marked earlier this morning. I was looking for the sale to happen for it to break and close below here, which it did. It hit all my take profit points and actually went lower than that. So if Bitcoin were to continue to sell, y'all, when it comes to cryptocurrency, I use the EMA. As long as the candlesticks are remaining underneath the EMA and I have my solid body sell candle, okay, underneath the area that I'm looking for a sale, I could take the trade for a sale, right? But yeah, So in this case, though, I'm gonna need a confirmation candle because of these long lower shadows. I don't want to get stuck. So I would need a confirmation candle to tell me, yes, we're back in the selling business. All right, and if that's the case, then I'm going to create another profit area because Bitcoin could definitely hit this with no problem. As you can see, those long lower shadows. Let's see, that's too far. So if I did, that's not really. I'm looking, y'all. Give me a second. Give me a second. All I need is a second. Give me a second. H2. Okay, so looks like we might have. Is this one up here? Let's see. Oh, we might have another one here. Here. Mm, 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 mm. Okay, so I got one broke through here, but then there's resistance and then support again, and then resistance again, and support again. So yeah, so I got all of these. Mm, 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 mm. And I think that's gonna be it for now. All right. I think that's gonna be it for now. All right, cool. So let's get it. Mm, mm, mm. And then I just want to see if price come touch this lower shadow again. That would be interesting. Interesting. All right, cool. So this would mean since that sale has already happened, I'm gonna remove this one. I'm gonna remove this one. So that means that up here or a bit higher, right, can be my stop loss. If I were you, I would put it up here, up in this area. You can even use the EMA too, y'all. That's what I used to do, but I stopped doing it because now I've gotten better with risk to reward. So that's a lot, a lot of pips that I would need to cover in profit. So you could actually do a bit above this previous breaking close for your stop loss, and then just make sure your risk to reward is at least 1 to 2. So let's just say it comes back down, like the second candle comes down here somewhere, then that would mean my stop loss would be 2,000. Yep, so 2157. So that means I need 4,000 pips. I'm not gonna get that with this. So I would need to find more areas where price could potentially go. Now, again, y'all, when it comes to crypto, I know y'all have seen it. That thing can go. Look, this is my previous week low right here. So that's a lot of movement. That lower shadow made right here. Okay. Oop, how did I thought I had it on there. There we go. All right, cool. So that's still a lot. So that means that I need to find some areas in between that. Mm, 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 mm. I need to change that to green, not red though. I need to change it to green, not red. Green, not red. Mm, mm. Okay, so that was 1, 2, and then it was resistance here too. Mm, but what about this here? Mm, I'm trying to get it on there. Get on there. Okay, so we got 1, 2, then it was resistance. 3. We broke through that one. Let me see. 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 Is this 4,000? I said from down here, right? So let's see if we get 4,000. There we go. So I'm gonna say this is my ideal take profit. Take profit. Now that means that you have to get through all of this. That's very risky, y'all. Super risky. So that would be super risky. 1, 2, 3, 4. Okay. All right. So this would definitely have to be your take profit in this area. And that's only if the sale was legit. Now, here's the thing, y'all. Again, keep in mind when you have to do that, that means that price could come here and turn around. It come here and turn around. It come here and turn around. It come here and turn around. There's a big gap here, so price could come in here somewhere and turn around, or just slow down altogether and start consolidating. This is why you gotta make sure that you're taking your time and assessing the situation, and then you are aware of the risk, and whatever the risk is, if you're comfortable with it, run it. If you're not comfortable with it, take your tail to something else. Stop trying to trade what other people are trading because you're like, I want to be able to make the amount of money they're making. It's not going to happen. That's not for you. I need you to follow what you feel most comfortable with doing. All right. Trading crypto, like I said, for everyone, especially as a beginner, it's not for everybody. All right. I highly suggest if you're starting out in the forex market, you stick to major currency pairs first, master those, and then move on to minors, exotics. Then, of course, you can get into your gold, silver, oil, and whatnot. Then indices, then crypto, y'all, because indices honestly is gonna really help you deal with the volatility and building that muscle even more. So by the time you get to indices, after you've learned and really gotten great at trading those other things, your majors, minors, exotics, and commodities and whatnot, once you have gotten comfortable with that, by the time you get to indices, your muscle is going to be, built up a bit. And indices is going to really help you to see if trading in the crypto space is even going to be for you or not, because the volatility is there when you're trading NAS 100 and when you're trading US 30. S&P SPX 500 is there, but it's not as swift of movement and it's not as volatile as NAS 100 and US 30. Right? So just something to keep in mind. Let me go ahead and do this. Like I said, y'all, risk to reward is the key. Right? And this is why I said I stopped doing what I was doing when I was setting my stop loss, because I used to use wherever the EMA was at. Because I use a 50 EMA when I trade Bitcoin and Ethereum. So I used to use where the EMA was at as my stop loss. But I wasn't making sure that I was getting the profit to match that, meaning to be a 1 to 2. I wasn't doing that. And that's why I wasn't as consistent with profit. Right? Oops, wrong thing. That's why I wasn't as consistent with profit. Right? So please, y'all, please make sure that you're practicing really great risk management. All right. So, and I'm putting these on here because now you can use these as potential areas to like put your stop loss in profit. Okay. So that means secure your profit. Uh-oh. That's not it. Let's see. Oh, all right. So I'm going to delete that one because that wouldn't be able to be it. So again, if you're looking for this is your take profit, right, for the sale because of the potential pips for your stop loss, then that means once price crosses here, this is where you would change your price point in your broker, change it here, your stop loss to this, so that way you're securing a profit. Now, if even if it comes back up, this is not the time to wait for profit to hit like or for your take profit to hit. For my day traders, swing traders gonna do what they do, but for my day traders, this isn't the time to really sit around and wait. Secure some of that profit, move your stop into profit, and then just let it run. Do your trailing stop loss by a certain number of pips, whatever you feel comfortable with, what your data tells you to do that. But at the end of the day, y'all, I would not suggest any day traders. I wouldn't suggest staying in the market too long. All right, because the liquidity isn't there and it can turn around. All right, so hopefully everybody got this. Right now, we're still looking for a sale with Bitcoin. All right, potentially look for a sale. If this candle works to sell, then that means that we could see price continues to come down. If not, go all the way down to here. Okay. If it doesn't do that and it starts buying, then guess what? It just buy. All right. I'm gonna tell y'all something. Because it's been playing in here, I would not even consider taking this trade at all for a buy. I don't want to play around with it because it could turn around. All right. It would have to break here in order for me to say take a buy. All right. So that means we move this here. So we know where it's at. And then this is where I would consider the buy. And it goes to the all-time high. Okay. That's the only way I would do it. If you don't do that, and they start playing around in here, nope, I'm good. I'll wait until they break this and then go. All right. That's my piece. That's it. That's all. All right, y'all. So we had USD JPY. We had USD JPY. We had gold, and of course Bitcoin. All right, those three, you got them. You got your three. All right. So let's finish this up. It is 6 minutes after. I tried to hurry up. I tried to hurry up, guys. I tried. All right. So for my people who want to save some money, they don't want to spend a whole lot of money, especially with Christmas coming up. Excuse me. Especially with Christmas coming up. And you're like, yo, like I really, really want to learn this skill or at least get started. What's some things that I can do to get started? Use this FOREX starter kit that I created. And then this way, this will help you to see if trading is for you. And it's at a very low cost, y'all. The amount right now, because this is for the holidays, so I'm not going to change the price. I was going to bring it back to the original price, but I'm like, you know what? I'll close out the year with it. And then at the top of the year, we'll go back to the $49.99. So let me tell y'all something. For my people who like to procrastinate, y'all have had since before Black Friday to get. Well, actually, no, that's not true. Not for this. Y'all have had since Black Friday, which was November 29th, to be able to get this for less than $50. That's all I'm saying. If you don't get it before this year is out, yeah, I'm not gonna be like, oh yeah, let me, what I'm saying, let me extend the holiday price for you guys. No, it's gonna be a new year and it's gonna go to $49.99. So if you're curious about trading and you really are like, I just want to see if trading is for me, y'all, this is less than a Starbucks run for you and someone else. This is less than a Chick-fil-A run, Target run, McDonald's run, whatever. Like seriously, y'all, this costs less than a fast food today. And this is to help you see if this is for you. If you're super curious, just test it out. All right. And then of course give me feedback. But you get 4 modules of training, right? You also get quizzes after each of the modules, right? You get reading materials. You get told some of the things to consider reading. There are a lot of examples in this FOREX starter kit as well to help you with like calculating those pips that I was telling you about, talking about the lot size and whatnot, risk management, all of that stuff. And at the end of it, y'all, you get a certificate of completion because you completed the kit, right? You completed the work to help you to see if this is for you. So if it's for you, by all means, run it, scan a QR code, go on there. The description of this video, there's a link in there as well. So if you want to click on that link, y'all, you click on that. So scan the QR code, click the link in the description of this video. Whichever one is easiest for you, go ahead and do it. And it should be, I'm remembering now, it's either the first or the second link. I forgot to look before this started. It's either the first or the second link, y'all. One or two. Where you click on that and then go straight to it. So for now, we're talking about less than $30, y'all. Get it before the price goes up January 1st. All right. Because after that, I'm not going to be lowering the price again. Okay. So that is it on that. Listen, y'all, the next It just went so fast. The next live market analysis is next Monday at 9 p.m. Eastern, 8 p.m. Central. That is our last session of 2024. That's it. That's all. I'm not doing another one because remember I told y'all December 20th is my cutoff. I am done trading for the year. Okay. December 16th. So if you know that you're like, you know what? I need to get in what I can get in. Number one, watch this replay and watch the other ones. But also make sure you set your put this on your calendar for December 16th, 9 p.m. Eastern, 8 p.m. Central. That's 6 p.m. Pacific, people. Make sure that you do it, okay? So hopefully this helps everybody. And y'all have a really great evening. Don't forget, Forex Starter Kit. Go ahead and grab it if you're curious about trading and you don't want to spend a lot of money to see if it's for you. If you like my teaching style, if you like what I'm talking about, if you enjoy it, if it makes sense to you, check out the Forex Starter Kit. Most definitely, that's going to help you to get a better understanding of how trading works in the foreign exchange market specifically. All right, and you can check on learning. So that's it, y'all. That's all I have. Thank you guys for coming on. Thank you guys for tuning in. Hit the thumbs up. Thumbs up, thumbs up. If you're like, yes, this was for me. Don't mind. My hoodie is cold in his house. Okay, they don't cut the air on. So I'm over here freezing right now. Y'all know me. I have my hoodies on. I put a hoodie on fast, real quick. But yeah, make sure that you like the video, share the video with 1 or 2 traders, people who are new to trading, people who are struggling with trading, people who are curious about trading. Share, share, and then also comment something that you took away from this live stream or any questions that you may have and you didn't think about while we were on here, okay? But when you watch the replay or it came to you later, type it in the comments and then I'll get back to you guys on that, okay? And be on the lookout because whatever happens with those 3 things that I showed you guys today, USD, JPY, gold, and Bitcoin, I'll let you guys know the outcome of that, okay? So that's it. That's all. Y'all have a great evening, really great week. Go get your bag. Take your time. Be patient. Follow your trading plan. Um, be disciplined, okay? And everything will work out. That's it.